Okay, let's look at the indices, the S&P. Lots of bearish people out there on Twitter, in social media, talking about a crash and blah, blah, blah. Don't see it myself. Looks all right. You know, last week we got down 26.71. We managed to hold this trend line and we've already bounced from the 100-week moving average. Not the most negative candle you'd want to see if you think a crash is coming. So I think it looks all right. Now, there is potentially a head and shoulders pattern being built on the weekly chart. Obviously, this could be the left shoulder, this could be the head, and we could build a right shoulder. But this right shoulder won't happen in a matter of weeks. It will take longer. A head and shoulders pattern does not have to be symmetrical, but I would be very surprised if we just formed a right shoulder here and then broke. Now, the neckline. I need to put the neckline on, of course. Let's take it that this is the left shoulder. No, let's take it that this is the left shoulder. And this could be the right shoulder building. So we'll see what happens into the end of the year. Do we rally up and then, you know, we could actually still go higher before the right shoulder forms, and then it won't be until we break below 2600 that the shoulder is complete, and then we can talk about a sell signal, and then we can talk about a crash. But until that happens, don't second guess it. I've done that too many times with head and shoulders patterns, and they don't always work. However, in the short term, things have worked quite well. I think the levels have worked quite well. I won't bother running through them all because you can read the report as and when. But the 200-day moving average has certainly been a factor in the low 2760 area. We had a beautiful short up here at 28.10, 28.20, and that will be another big level if we do manage to rally up again this week. Break up through 28.25 would be bullish. That's it. To me, this is just one big sideways trading pattern. So until we get a formation of a formation of a head and shoulders pattern or something to tell me something's going to move, I'm just going to consider that we're going to trade within this range, chop around, and hopefully we can scalp the levels and make some money, but I wouldn't hold a position for too long. Obviously Dow Jones is a similar picture. We've been able to trade this fairly well, but recently it's got more difficult, and it will get more difficult because the longer we trade sideways in any market, the harder it is, because you're trading the same prices over and over again. So the levels get blurry, and that's going to start getting more difficult into the end of the month if we just start retracing and staying within this range. So while the indices have been good, be careful because they may not be as good. And I think now we're going to get better opportunities in the Forex market. So I've been focused on the indices, but I think we're going to have to leave them alone a little bit, clear the air. Let's focus on the dollar at the moment. That looks like better opportunities. The DAX has been a pretty good market to scalp. Last week we had resistance up at 11,500, 11,550. So if you kept selling that level, you did do well. Let me see. Worked on Monday, Tuesday, and Wednesday. Sorry, hang on. That's Friday. So that's Thursday. So that's Wednesday. Yeah, that worked on Wednesday. Didn't quite get there. Oh, we got there we got close to it on Tuesday, and we certainly got there on Monday. Oh God. Getting my days of the week wrong anyway, blimey. You can see what I'm talking about. 11,500 to 11,550 was a great shorting opportunity. Now then, this 23.6% fib down here at 11,230, 220 seems to be holding. I had that more as a target than a support level, but it seems to have worked as a support level. I can't say I'd be too keen on buying it again. It looks like it will break down eventually. There are the levels really, you know, profit taking it around 11,370, 340 would have worked. It has certainly been a level. You can see by the bodies of the candles that has been a factor. So if you have been selling it up around 500, 550, nothing wrong with taking a 200-point profit on a scalp. And you can see that this level down here, which should be weaker, has actually been quite strong and has held the downside. Can't really elaborate on that until we get a move. Again, this is just mostly sideways trading stuff. So if you're scalping it and those levels continue to work, excuse me, all well and good. But the levels might start to break down because, as I say, the longer we trade sideways, the harder it is for those levels to keep working. This resistance in the FTSE has also been working. 70, 75, 70, 85. It's remarkable, really, how stable the FTSE is when the pound's all over the place with this Brexit stuff. But you know, range trading, this seems to be working as well. I don't really get involved in the FTSE, but I just thought I'd show you the chart because Brexit's in the news. Okay, that's me done for this weekend. I'm going to get on and write the reports.